Going to do a review for Thursday, the 24th of April. Nothing particular planned out of how I'm going to go about this, but it's really just talk through my trading in general, and then I want to go over a few trades, especially in gold, that were really cool. But as you can see from my performance for the day, started off a little bit red. I'll go over what these trades were. Then eventually climbing back to quite nice in the day, and then took a couple of trades that just didn't work out, and then caught myself down before hitting zero. So didn't want to end the day red, and did the lockout just to make sure of that, guarantee it. But start with gold. So gold, really cool framework today. That it was actually partly due to the lesson I learned yesterday. So yesterday in this area here, I saw how we had this inefficiency completely filled in. On the 1 minute you can see as well, completely fill in this inefficiency, come up to the impulse high, fall short of it, and I saw us ranging below that. Usually when we completely balance an inefficiency like that, it means that we're planning on having a low resistance run up through that level. So initially I was looking long, that didn't end up working out. We rolled over, broke this intermediate term low, and then traded low from there. What I learned from this yesterday was what had just happened prior from the London low is we had been trading high, had this big enticing rally, and since then there was no trailed sell stops taken. So from this rally, whoever was long, they didn't have anywhere to put their stop loss, and until this low was engineered. So following this low being engineered, we just ranged in there. Then we had the 7 a.m. open on this candle. We run higher, and for the 7 a.m. Judas, falling short of buy side, and then just rolling over from there. So that made it a really nice short opportunity. Also a continuation on the next candle, selling off. So the lesson I took from that going into today was we have a very similar kind of formation where we have this big enticing rally and then a pullback with a low engineered. So this is the first significant looking sell side pull. Like, sure, we've got that, but from this big rally up, after gapping high as well, leaving all these smooth lows, we never really engineered a really obvious pull, enticed away, and then took it until this low. So I was eyeing up the London low. I saw how we're consolidating in here. I noted where equilibrium of this range was from the drop down, and the framework was essentially target trailed stops. Also, I really like the fact we have this previous day high and how we had run above it with this rally, also taking all this internal range. On the 15 and the 30 minute, it looks like we fell short of the CSD. However, if we zoom into the 5 minutes, you can see that actually we beautifully hit that change in state of delivery and start off from there. So everything was in play for us to reach lower towards this. And then I was also looking for a long because we've just dropped from this premium all-time high down into this daily busy, respecting consequent encroachment of this gap. So in fact, perfectly hitting the CE, reacting nicely off of that. And if we look at the high time frame, it does look like we are bearish down to equilibrium of this range at this point because it's very extended. This is lining up, equilibrium lines up nicely with the sell side pull, and unless we get a really decisive pop out of here, I'm expecting us to run up to a short-term premium from the entirety of the drop down, likely super out this previous day high, and then roll over down to the midpoint of this range and below. So that kind of gives you an insight into what I'm looking for in the high time frame is for us to head up into a premium of this range, likely take out this previous day high and then roll over. And so I was bullish on the day and looking for us to first take out the sell side and drop into this range as well. I also really liked how this low, so the low we engineered, the London low, it lined up nicely with this old low from the Tuesday Asia session. So if we drag that out as well, now we have relative equal lows lined up with the London low, and that was a further confluence for the super long. Then if we look at, I prefer the 15-minute because I can actually see the swing points. But if we look at these swing points, we have a swing low and then sell side delivery and then buy side delivery up to here. So this inefficiency is only a sell side delivery. And when we have a single pass down, then a single pass back up, you look for the midpoint of that range to be respected if we're going to remain bullish. And so that's why I was very interested in anything in the top half of this fair value gap of this range. And I was confident we shouldn't head down to the low end of that and back into this gap. Another reason why I was quite confident in this long, I'll go to the lower time frames after this, but with my entirety of the daily bias. So firstly, I was looking for a short down to take out trailed sell stops, and then I wanted to have a long, trusting that we should reach back up to a premium of this range. And part of the reason why I was very confident in this is, one, is the balanced price range with a single pass down and single pass back up. And two, we have the 300 sitting just down here. And one of my observations is that when we have a key institutional price level, such as the hundreds, 20s, 80s, etc., when we do not retest it on the way past, it's often an indication that we're not planning on coming back anytime soon. So if we drag that over here, you can see that we didn't engineer any sell side pull at this level. We just ripped straight through it. Another example of that could be up here with the 50s. So we've got the 50s, and when we get above it, we consolidate above the 50s, and then when we break back down, we don't have any retest of that level. Probably you'll find on the low time frame as well. You can see it, we just break right down through it, and then do we return back up to it? Nope, we consolidate below it, respecting this daily opening gap, and then trade lower. So going into 7 a.m., that's usually when I'm looking to find trades. I really like the 7 a.m. Judas. I find that incredibly effective on gold. It's a really nice framework to use, but obviously if I'm looking for the sell side to get taken, I want to see a 7 a.m. Judas higher. I was aware how we had taps equilibrium technically, so this could be enough. We do have a Cibi up here as well, but we actually fell short of that. And this was just an old short-term high I was interested in that we never actually reached. But here's what we're looking at. We have, once again, another rally, and then never quite taking out that sell side, so another confluence for the short. Then we have this drop lower just prior to 7 a.m. and then from 7 we go directly up. So Judas swing went upwards, exactly what I wanted to see. I wasn't entirely sure how far up we'd reach because we had technically souped a short-term high above equilibrium and rejected from the low end of the new day opening gap. So I thought maybe this would just come up to deep premium, sell off from there. And yeah, didn't have very high conviction on that. I had high conviction on this being the draw, and I really liked the fact the 7 a.m. Judas was going higher. So I thought, well, I'll just try a quick short. Just jumped in above these short-term highs, overstop at the high, and sure enough, gets taken out. But yeah, so probably could have waited for a bit more of a confluence, and also potentially could have waited till at least 7:30, because I have noticed as well with the 7 a.m. Judas, a lot of the time it will continue doing its Judas thing until around 7:25 to 7:30. And when I got my entry all the way back here, it was only 7:23. So even if I just waited to 7:25 or 7:26, already one, it's telling me that it's likely going to take out this high. And two, if I had waited for that, I could have caught potentially this short, which I was watching, and I got in over here. I'll go over that in a second. But yeah, lesson from this is if it's not very clear and obvious what's happening, but we're clearly in the 7 a.m. Judas, then expect for it to continue up going into the 7:30 time of day. So we make the high at 7:33, begin to break down. Really like how we have this small volume imbalance on the way back down, and then dropping down into here. So what I was looking at in this range is how we were respecting the midpoint of this gap. I like that. We're dropping lower, and then once we're dropped into this range, we just come up, taps above this buy side pull, rejected, and then drops below these swing lows, started trading higher, and then failed to trade higher and begun breaking down. I got short in here in this candle, and sure enough, it went lower, but it only went lower to below these relative equal lows, and then had this big run straight back into the range. And yeah, I had my stop sitting above this high. It missed it, traded lower. I then trailed my stops to this high, thinking that it shouldn't come back up there. Just consolidates until the news, and then 8:30 nothing happens. Then 8:32 it starts running into buy side, right to the buy side, shifts lower, and I recognize that this would be bearish, simply because if we look at the 5 minutes to start with, one, we have the 8:30 rating buy side at a premium and rejecting lower. Two, if this was bullish, we would want to see part of this BISI, this inefficiency, remain unfilled, especially on this 1 minute chart. We shouldn't be coming below the midpoint. So the fact we're coming all the way down and there was no like significant sell side pulls on the left side of the curve for it to take out and reject, it tells me it's almost guaranteed to go to this low, and then we've got smooth lows. Our bias is bearish. We've had the 7 a.m. Judas high being held at a premium. So I really like this. I got in mostly in this area and had my stop sitting above the midpoint of this long wick, which it did come fairly close to. However, I respected it. I also really liked the fact we had this impulse high, so which is a short-term high before a displacement lower at a premium of the range, and I really liked how we came into that. So I added there, got a nice rejection. When we came up here, I started getting a bit worried, and then eventually it rolled over really nicely. Covered as we dropped down into the range and towards the 7 a.m. price. And when I saw us start rejecting the 7 a.m. price, I closed out the bulk position, added some more back on at these relative equal low level. This is a way I like to use old lows and old highs. So ICT teaches that, above old highs, there's liquidity. So above highs is liquidity, like above this high, there's buy side, and below a low, there's sell side. However, as an actual fact, people place orders at every level. So people who trade support and resistance, they'll have sell limits here at these old lows. People who want to buy at breakouts, they'll have buy limits. And so anytime that you see a key looking level, especially with smooth highs and smooth lows, you can know that there's going to be a whole bunch of liquidity there, and the markets are likely to draw to that level. And that's sufficient for getting in positions and also taking partials. So yeah, so I set a order there. This is drawn out from the high to the low, and I had some more limit sets just up in this high inefficiency, thinking that we could draw up to that because that is also the CSD. However, we only referred to this lower inefficiency. That's also another thing I was looking at. I was wanting to make sure that it was in a premium of the range where it's entering. So that filled really nicely at 8 plus 9, rejected lower, dropping into sell side. I was considering entering some more here. I think I did on one account. However, I was also thinking, oh, maybe it runs up once more into this area and I could get a really good fill. Never happens, traded lower. Now we were entering this busy. So this is that busy I was looking at. So the SIBI, the balance price range where I wanted to see the midpoint respected. I really like all these smooth lows down through here. I was also looking at this low. However, I was aware that this did look like a kind of formation where it might not take out that low, and sure enough, that's exactly what happened. Just cool that I intuitively picked that up. I don't know what it means, but yeah, but we came below into this area, midpoint between these two pools, and just stopped there. So my standard operating procedure for buying when we have nothing really to reference on the left side of the chart, other than this pool. So I knew I wanted to get below this pool, but other than that, I didn't have much else to reference. So my standard operating procedure is to wait for one, a false low to be engineered, and then for us to get below it, which we kind of do here. I suppose engineer a false low, drop below it. However, I was also thinking we could get another one, so I thought we might have do that and then do the soup. And then the second item is that I wait for the momentum on the 1 minute chart to slow down. For example, let's say I thought I'd buy below this low. As soon as it starts dropping, we aren't slowing down. There's no point to buy if it's just continuously going lower. But then once it's in a key point of interest that I had, um, and also begins to show a 1 minute rejection, then I can get in on my entry, use the high time frame invalidation, which for me was just down below the low of day and the low end of this gap as well. Also allowing for us to wick down below the 300s should it want to. So got long there, started riding it back up. It's looking really good, but once again, because of what I thought could be happening with us coming down, engineering a low, and then swooping it out, I thought, you know what, it looks like it might be doing coming up a bit and then come down once more and then go. And so I trailed my stop up real tight, and I had some limits set down here. I was like, cool, now I'm going to even get a better entry. Then we can go below this low as well and closer to CE. However, that never happened. We began rejecting higher, but I did something really cool here where I actually recognized what was happening real time. I had an entry model, an entry technique that actually is specifically for this type of scenario where we have a failure swing put in, so a higher low, and then it starts rapidly rejecting higher after showing that it has no willingness to go low. And so on this candle and through here, I jumped in long on one account and rode it up. So I did really good with that. What I could have done better is obviously one, recognizing that we had engineered a false low already and we're within the range, so we don't need to engineer one more. Unless we dropped all the way down to here, then maybe you would want to wait for another false low, but I think this kind of pause is good enough for a false low to just soup below to buy, and it's well within the kind of zone I was looking for, which I mean technically was only really this area here. That's kind of where I'd be willing to buy. So it worked out quite nicely. But yeah, not demanding that it comes down and sweeps one more time. If it's in within the zone I'm looking for and invalidation isn't ridiculously far away, then as soon as we lose momentum, that's a reason to enter. So entering there, really nice. Then as we trade higher, ideally I should have enough size on to be able to take a small cookie should I want to. Um, but yeah, but then add it back on as we push back up through in this area. Unfortunately, I didn't have enough size on because I only put on the tiniest part of my entry because I was thinking, okay, I don't want to just jump in all at once. Well, I do really, but I wanted to just put on an initial position and then try and get a better entry should we come down below the low again. So I only had the smallest size on, and I couldn't, take a partial and hold the rest. So I took it off, thinking get another entry, didn't, rallies up, but really nice entry opportunity right there. Following that, I did think we could potentially dip back down into this area. I was referencing, so not this old low over here, but more this old low. So the London low. I wanted to see us drop down once more into that, so with this engineered low. So I thought we could drop down as far as that and then go higher. However, as you can see, that did not happen. But I did end up getting long anyway, because I also recognized on the 15-minute why that wouldn't happen. So similar situation is over here where we have a single pass down, single pass back up. Same thing happening here where we have this inefficiency lower and then efficiency higher. And so you want to see this range remain partially unfilled. As you can see, the body's respecting it and not entirely closing in this gap. So I thought, well, that would be a bit rich for it to come all the way down here, especially seeing as we have this consolidation, which painted both sides, a buy side and sell side delivery. So sure, it could come down there, but it probably won't. And so what I figured is that we had this nice pull engineered right inside this volume imbalance, and I wanted to buy that and soup it long. So as we dropped into that, I went long, had my stop sitting right down the discount of this range, because we also have this as a order block taking out the swing low. So my stop sitting down there, and should it take that out, I would have simply waited for it to get down to this line and bought there with a stop sitting just down there as a final attempt. So I allowed myself 2 attempts for this. Luckily, the first one worked out. Pumps higher really nicely. I took one partial at premium and internal range, as is custom. And then, yeah, and then it began breaking back down. As we broke back down, I added once again, and it came right down and took out half of my position. So my stop trailed up to below this inefficiency. However, it appears that I actually was, had a few of my positions slightly above, so probably sitting right there. Technically, it should be below the order block. I need to remember that. It's another lesson from today, is that if I'm putting a stop loss in somewhere, it needs to be below the actual order block, which is any down closing candle swing low with no inefficiencies below. So that would have been the correct location. It wouldn't get taken out. And the reason I didn't do that is because I saw the same kind of pattern as we have over here and over here. On the 1-minute charts, I saw how we had this pass down, a bunch of time spent down here, and then a rally back up. So I thought, well, it shouldn't come all the way down here, surely. So I was kind of thinking that it shouldn't get down that deep, and should it get near it, I'd get out. Gold is one of those assets that does tend to have deeper retracements than one might expect. And so that would have been a nice thing to avoid by actually putting my stop loss in the correct location, which is below the swing low with no inefficiencies within that range below it. Same thing here. So once we had this pullback, I then trailed my stop up to here, have this nice rally. I didn't take any partials, or I might have taken 1 or 2, but I held onto the core of my position, wanting to target this high, and then eventually the spice it up here. And went for a afternoon bike ride, came back, and saw that it had fallen just short of it and it had got up to about here. So I got really lucky here, because I did trail myself up too tight and almost missed out on this entire run. Once again, inefficiency, swing low within the range, and it would have actually had to be at ERL in this particular scenario. So stop loss should have been all the way down there. So just trailing is a little bit too tight. If I'm going to trail the stop loss, it needs to be trailed really tight, not just slightly tight. And then with the final position, I was planning on holding it even higher than when we reached. I was planning on holding it up to around here. And when we got into this area here, I noticed how we were very close to this key pull. We had hit all this buy side, and I could see it looked like it's beginning to come lower. So I thought if it came lower, it could potentially come down into this range and potentially down to this order block again, all the way down here. So I decided that should it do that, I'd rather lock in what I've got and jump back in down there, which I think is a good decision, because part of the reason why these accounts have been taking so long is because I've been trying to catch big runs and then having nice, a good, 0.5% profits come back down to break even or even a loss, which makes no sense when I'm only trying to make, I think it's like a 8 or 10% return on the account to pass it. But yeah, then get this rally into the close. So I'll go over executions real quick. So this is on 5K challenge. I just started. I was down $70 yesterday, and then overnight I took one trade. As you can see, it was a really, it just went straight to stop loss, negative $42. And it wasn't really based on too much either. So it was kind of not the best trade. I simply got short with a stop loss above this order block, despite the fact, sorry, with a stop loss above this order block, despite the fact that I already, that very day had been watching this buy side pull, and the fact we completely balanced this range and left smooth highs. As you can see, I wrote out smooth highs, knew it would go there, and got stopped out. So I started this account off negative 42 on the day. Now I'll go over my executions from today and see how that's added up to put me where I'm at, which is, zoom out a little bit. Yeah, zoom out a bit. Yeah, yikes. Okay, so history up 92. So a fair bit of profit, 130 profit today on this account, which is pretty good going considering. And that's based on, so this particular account, I didn't take the short up here, which I did on the other one. I waited. I then got short in this area, as I explained earlier. I didn't really take any profits. However, when we were spending so much time here, I didn't really like it. Then I saw 830 fail to go lower, and I could see that, yeah, it looks like 830 is going to manipulate higher. So I took a part of it off there, closed the rest out there, and then got stopped out on the remainder in this area. These arrows here are me actually getting long. Kind of a dumb decision. I did the same thing yesterday as well, or the day before yesterday. We're getting in too early, being right on the idea, getting in too early, then getting long and catching the final little pop before we reverse. So you can see me getting long, then closing out the long in this area. Then reverse lower. As soon as I saw that, I was like, yep, this looks really good. Got short, added, had my stop sitting up there. Was a little bit uncomfortable in this area. Still fairly confident in the trade. And when I saw that we were just referring to this impulse high on the short-term high, it gave me more confidence. So that's why I didn't panic. Then displacement lower really nicely. Taking a partials, we hit the lows. Also then waiting until we slowed down a little bit with momentum, which we did a little bit here. Nothing too significant, but we did slow down a little bit. So I think that was quite nicely done actually. And then waiting until we hit the 7 a.m. low. We initially wicked just short of it there. I knew that that's the 7:30 open right there. So I knew that we were likely to take out this swing low. And so I held on and then took it off as we dropped into that. Got a really nice fill. Ran back into the range. Got short at these red vertical lows. Fell short of my limit sell sitting up here. covered as we hit deep internal range liquidity, and then also covering more because we were now at deep internal range of this parent dealing range. Closed it out ahead of the 9:30 open because we were relatively extended into the range, and I thought the 9:30 a.m. Judas could run higher. I think that's 9:30 here, I believe. So it does run higher. I was considering getting short in this area, but then as I explained earlier, really thought, okay, maybe it gets all the way up to there and that would be really sick because there'd be a much better entry up there than down there. Now, if we look across at I think the 5 minute time frame as well, it kind of looks like it could have gone up there. So yeah, we have this 8:30 open. That's a really clean looking order block. And of a buy side pull sitting just above it. So in hindsight, I can see, it is a bit of a breakaway. We have a very consolidated balanced range to the left and then a drop back through. So there's no need to fill that gap. But I did consider that, it did look like it might want to come up in soup. So I actually moved my limits. I had limits set there, had limits set at this order block, which is also really clean. Beautiful order block. And I moved them up to there and missed out on the drop. I then randomly bought on the way down, simply based on a concept that I'm, investigating the midpoint between these two pools. I thought, oh yeah, I'll just buy randomly in the middle in case it does a little bounce, which it didn't. Small loss, but very unnecessary. Very unnecessary. It's just a waste of money. Then dropping down, as you can see, getting long 0.01 lot, so the smallest size you possibly can get, thinking that it'd be adding more slightly below manually, and then taking it off, thinking we would come lower. We didn't. Then recognizing my mistake and that we're having a failure swing, got in on this pump up here, quite confident in it, put on 0.04 lots and ran it up into this range, taking partials. As we hit these key buy supports, we also got midnight sitting right here. So that's why I took off 2 at the midnight level. Then as we pulled back, I was, as I mentioned earlier, eyeing up that old swing low down all the way down here. So I thought, oh yeah, I'll jump out there, jump back in down here. Didn't work out like that. That's okay. And then this is where we ended up. So recognizing that volume imbalance, the swing low, buying the soup with a stop sitting down here. And yeah, that working out really nicely, taking some partials up in premium and channel range, adding back on as we drop back down into this area, thinking I was buying this order block. And then it comes down, it only stopped out one of the ads. So to be fair, I still held on to most of it, but really close to my stops. I was not expecting it to come this deep, and it kind of, yeah, it wasn't ideal. As we started ripping back up, I recognized at this point that, yeah, this is looking good again. But for some reason, I still just took it straight off, which is dumb. Like, so from this edge, because I took one off all the way down here and one off there, I actually lost money from that. The rest of the position, I traded up to my level points of interest. So the first one was I wanted to see this buy side pull hit. As you see, we fell short of it initially, pulled back, fell just short of my stop loss, and then rallied up. And then I took it off just at these highs, locking it in. And then as we consolidated, I wanted to target all the way up there. And then I saw I was pulling back, so I trailed my stop just in there and got stops. Thinking I could get in down at this level, but that never happened, and we continued high. Yeah, so that's one account, and that's my balance is now back at 5K after getting down to 4,850 or so, 4,870. And then you can see this is the other account. So this is the one that I got to 5,400. Thought I'd passed it, but turns out you need 5,500 because it's the standard account, not the GOAT. So getting short too early, not waiting for that 7:30 a.m. Then getting the failure swing entry short, have my stops trails or at for this particular model on the 1 minute, this failure swing, the stops go above that swing high. So the only correct place, but ran straight up into it. Then I figures that, or actually they could be above this as well. So that's something not very clean execution. Trading lower and then not liking it, getting stopped out on the bulk of it there on I think that was quite a bit of a wick. And as you can see, I did not add again, which was a good thing because I recognize that we're approaching 8:30. It looks like it may want to run higher first. And then as we approach 8:30, trail my stop down even more just because I knew it was probably going to rip up. And sure enough, runs up. Getting short, I closed out one up here, but then added it straight back on. And on this particular account, I was obviously actively trading this more than on the other one because I took a whole bunch more partials. So as we traded lower, taking it off as we hit this internal range, I should have really been aiming a bit lower towards this impulse low. But that was a bit early. Then as we traded into this inefficiency, taking it off, could have waited for the momentum to slow, which would have got me a slightly better fill. As we hit the as we drop down into the 7 a.m. price, same as the other account, adding these old vertical lows, covering deep internal range, and then covering at deep internal range, expecting us to run back up. Actually never happened, and yeah, didn't take anything else until in here. As you can see, taking the same long, covering, adding back on, and then getting stopped out on that. However, this is not showing all the executions. Well, I'm 100% sure I was still holding this longer. Trade history. Trade history. There we go. I don't know why that happened. I wasn't showing all the executions, but yeah, getting long, covering, adding, getting stopped out on one, and then the final position holding up to all these 3 points, or 2 points actually. So on this one, I was obviously targeting this high as my partial, but we fell short of it. I saw that we were beginning to pull back, and I thought, okay, cool, I'll jump out here and I'll edge back on in this order block, which I did. That pulled back almost at my stop, didn't quite, and then ran up, and then I took it off as we're approaching this high. And the last one, I just took it off at this high as well. Just want to lock it in, as it was getting late in the day as well. As you can see, it did just consolidate for a fair bit. So I think it was very reasonable. It was a very premium pull, a very reasonable pull to take it off at. Yeah, just locking it back in. So I'm just $50 away from where I was before I went into a slight drawdown. So very close to getting back to a new equity high. And then I just got another 150 to go to pass the account. And yeah, total profit on this is 63, but I was also down probably about $40 as well on this account today. So about 100 profit overall. I don't believe I executed NASDAQ. Pretty sure I didn't. No, I didn't. That's a good thing. I think yeah, I was considering it. I wanted to go long initially from right here. We've got the 20 sitting here, and I saw we're pulling back. We had some old lows lined up exactly where we reached here, some old lows. And I thought, okay, if we're going to go there, we can go a little bit lower, and I'll jump in there with a wider stop. Didn't get it. So rallying up as we pull back in, I thought this would be a great wick midpoint to buy it, which the wick actually comes up a bit higher. We dropped perfectly into that midpoint of that wick, and I just missed that trade. I then wanted to buy in this area within this order block. However, we never even drop into it. we just consolidate and then rally at the open. And then I just kept out on this account, which I believe is a good thing for this particular account. Okay, now on to top step account and go over what exactly happened here, why this fall off an equity curve towards the end of the day. It wouldn't have been as bad, but in that scenario where on gold we had that deep pullback that almost stopped me out in this area, I was actually just taken out perfectly on my top step account. So that accounts for these two transactions just here, those two. So minus $91. So 91 of this was that, probably this drop just there. And other than that, a bunch of NASDAQ trades, all occurring within about 20 minutes of each other, it seems. So yeah, I jump over executions on just the gold to start with. And then I will go over the indices. So I was trading gold on this the entire day getting short in this area despite us running out this high. So getting short, getting stopped out, then jumping in within this range, expecting that 7 a.m. Judas lower, Judas higher to be then faded down lower. Getting stopped out as I trailed my stop in and closed out because I recognized that after we had this run up here and this drop lower, didn't want it coming back up there. It ran straight back out, so got out for a very small loss here, which was nicely done, I think. Then getting in short in this area, really nice executions in here for entries, recognizing we were breaking down quite aggressively, had the stop in the correct location, then adding to it in this run up here. And then as we broke down lower, I took one off at 49.3. So just here. So similar to the MT5 account, the 5K challenge. Very, very similar executions. And then at 7 a.m. price as well. Put it back on too short. So I closed out the entirety of the position here. So I found that it's actually usually works quite good for me. Is actually closing out the position when we get nice and extended and not holding a core at all, or if I do hold a core, be a very, very small size. Then finding more entries on pullbacks because gold does get extended and have retracements. It has a lot of nice deep runs in both directions, which makes it nice to trade, but difficult if you want to try and hold on to a longer trade. So I think taking the trade off and adding it back on is a better price when we are clearly extended and at a deep discount does make sense. Covering once again down here, exact same story, looking for a short up there, never got it. Also tried that midpoint super long, which was a dumb trade, waste of money. Not sure exactly how much I lost here, but more than I needed to, probably a good 40 bucks at least. And then getting long, I only put on the one position, thinking I'd add on another one just below, and then taking it off with a stop out down at 41.8. Didn't get the opportunity. I wasn't fast enough to put on the trade here as well, but like I did on that one account, but that would have been a really nice entry. And then here's that long that I got on that soup below this old low inside of the M15 inefficiency, which looks something like that, I believe. And yeah, taking one partial as we ran up. Should have really been up in this premium of the range, but took it off a little bit earlier. Then adding back on, looks like I decided to get a slightly different entry somewhere. Well, I added it on, took it off for some reason, and then jumped straight back in at a worse price. And then got stopped out perfectly at 32.1, so exactly there. So precisely at the low, in fact. Okay, I went one tick below my exit price. Yeah, missed out on that. That's all good. So across the indices, go over the high time frames. Got everything hidden at the moment, but I really like what we're doing. We're pulling up to a premium of the range. So once again, NASDAQ sweeping below this old swing low perfectly. We then have YM coming to the midpoint of these two pulls. So really nicely hitting that. And then RTY dropping down to this impulse low. Didn't actually take it out, I don't believe. But nice and extended, getting 200 handles plus below the 2K level, and now reaching back up to it. So likely going to head back up into the range as we are here. I'm expecting us to reach a premium. And at a premium, we have this really obvious buy support from the previous week high. So that's what I'm looking for us to hit. If we look at the daily charts, you can see it really stands out. So at a premium of this range, that pull really stands out. We've been ranging below it. Enticing longs, I believe, as well. So I think once we do get there, likely to be quite a sharp reaction back down. Not expecting us to come up very far. This right here, the midpoint of this range, is kind of my line in the sand. Well, not line in the sand, but I don't believe we will get above that. If we're going to continue bearishly, that is. So I believe this is a very false rally. Likely close the week very green, though, going into the weekend would make a lot of sense. As you can see, we did sweep out the previous day low across the board, I believe. Yep. So that's what kind of put me off a little bit. No SMT this morning on the lows. We can see that as we drop down into the 1 hour chart. It's the new new opening gap higher. And then another new opening gap just in here. And then we rolled over, made a low at 4 a.m. going into 5 a.m. Started climbing higher. I was referencing this old swing low over here. And I liked how that lined up with this old low as well. So these vertical lows on the left side of the curve, also this significant looking old low over here, or previous day low. I drew that across. Wanted to super long at that level. Also like the fact that we had this really clear 1 hour order block. Wasn't looking at too much on the rest of stuff. As you can see that YM and RTY are a lot weaker than NASDAQ and ES. But yeah, pulling up higher. I was then looking for a long. I only need one of these lines. I like the fact we had this long wick. I expected the midpoint of that to get respected. We also have all this balanced price action on the left side of the curve, so I didn't think it should get down into this range. I was willing to allow for it to get down to around about here, a worst case scenario with my entry. Then, yeah, if we just compare them real quick and see exactly what we did get some nice SMT at the open with 9:30 a.m. Taking out the 9 a.m. low on ES, but NASDAQ failing to do so. YM just dipping below that 8:15 and 8:30 a.m. low, and then rallying from there with RTY failing to take out the 8:30 a.m. low, and just pushing up really nice and strong straight to the previous day high, and continuing to grind higher throughout the day, which is really nice to see. So if we look over on this chart, so there was a news event, I think it was a earnings at 6 a.m. Or 6:30 a.m. So we have this long wick printed, enticing shorts, sweeping out whatever highs there are internally. And I only got to the chart as this was printing. I looked at the NASDAQ chart at 6:30, and by then it was already ripping. But I really liked this particular setup because obviously it's no need to go lower. Clearly pushing towards this buy side. And if you look at the narrative behind this, we've just printed this long wick, entice everyone short, and then come low, and then rapidly overlaps this wick of a really strong candle going into a news event. And because of that, I see this as we've created a false high, printed a really long wick to entice shorts, and then just started rapidly overlapping that going into the open, not open, but 6:30 news, and then we just keep pushing really nicely. Following that, I saw, I wanted to get long this old low. I saw we had this long wick on the 15-minute chart. Didn't think it should get below that. Sure, we had these relative equal lows there, but I didn't see any need to go into this range because we have all this balanced price range on the left side of the curve. But because it was relative equal lows, that made me think, well, I'd like to be able to allow for that to happen so I don't have to be absolutely perfect. So I figured that, well, I'll buy at the 20s, which is this level here, and I'll put my stop below this inefficiency. And obviously I'm targeting previous day high and all that, but at a very minimum, I wanted to target the midpoint of the range. So that's another reason why my bias was up to there, because no matter, where are we? I'm disorientated. Here we go. So that's the equilibrium from this drop down. We clearly had a CSD. We fell short of buy side, of premium buy side. So that was my minimum target, and I wanted to buy down here. So that would have been the trade, which would have been perfectly fine. However, it never quite made it down there. So we then started trading higher. And I really liked the fact we had this long wick, really fast manipulation. We then have a painful grind up against it. Everyone's enticed short at this point. Everyone sees a long wick, they're like, oh, wow, it's so bearish rejection. There's a lot of selling pressure. So they jump in short as we keep pushing higher. And now everyone's trapped short, and they're not going to drop back down to let them all out of their short position. They're going to rip against them. So the midpoint of that wick I expect to be respected. I saw how we had the 80s down here as well. So that's that level right there. We've got the 80s and how that aligned with the wick, and how we wouldn't want to see it go into the lower quadrant of this wick, which lines up nicely with this lower order block. So I wanted to go long here with a stop there. However, this drop down happened and I wasn't ready for it, and then rallied up. And at that point, I didn't really want to get long in this area. Sure, I could have, but I was really hoping it would come down once more for one more soup. I had a limit order sitting there. Never did, but that would have been a really nice trade going into the open, hitting the equilibrium point, and just with the narrative that we've got trapped shorts and respecting that. Then I wanted to get long on this order block, and just below the opening of the order block, we have got the, once again, the 20s. However, we held up really strong here with like not taking out this lower tool, which makes sense simply because this range from there to there painted multiple times both directions, so entirely balanced. And so this technically could be an intermediate term low because we've balanced this range, but still didn't really like it. And yeah, so let it go. Didn't really trade the open. And I'd probably just have to go through my executions to really see what I did throughout the day, but I didn't get caught offside, let's say. So jumping over to NASDAQ. This was just a short from the New Day opening gap. If I drag down here, so I saw how we had this 7 a.m. We were going into 7 a.m. We'd hit the New Day opening gap CE, and I thought, okay, we're very extended. We're likely to have a retracement from the New Day opening gap, which it is a very viable trade, but it's not my model. And I saw, well, it's not my model. I should just get out of this. I did. I just quit and got out. Not getting my fills down here, which is fine. Not trading the open. Then I got a nice long. I recognized how we had pull down below this sell side pull. There wasn't SMT there, but it was still a nice pull to hit. Also, a really obvious sell-off at the high that stalled out after hitting a sell side pull, had this nice CSD back into the range. And so I saw that as, okay, this looks really good. Everyone who wants a short, they were all going short at the moment. So got long, took one partial as we ran up because we were beginning to lose momentum, fall short of this Sibi. So I took one off, I added it back on as we dropped into the 20s, all the way up here. It came down quite deep. I had my stop sitting down below this lower candle at the body. Ran up into the range quite nicely, took a partial inside the Fair Valley gap, and then added, as we dropped into this Fair Valley gap, I was kind of in two minds because we did have SMT on the highs. And yeah, but I did also trust that this was more likely bullish than bearish. Obviously, we're very bullish looking, and I didn't trust this high at all. So got in long at 21 even. We never actually hit the 20s. We only hit, if you look at the low, it was at 20.25. So we didn't even hit the 20s. So it's a good thing I put my limit order just above it. And the reason why is because we didn't have any pre-existing liquidity pool at the 20s. There is just an inefficiency. When there is a key price level, such as any institutional price level, we just use that. And then we have, where's my predictive, I think it's called, drawings. There we go. If there's just say inefficiency and that's the price level, and there's no like pool engineered like that, that we could expect price to come down and soup and then go higher. But if there's no pool there, then a lot of the time we can see it come down and fall just short of that level and then continue. So that's why I got long above the 20s, and that worked out nicely. Covered fairly fast as we were running up into the range. Yeah, well, wasn't really loving the price action and not really what I wanted to be trading. I was green at this point in the day. This was at 11:04, and I was like, cool, I'll just call it here pretty much. So yeah, this level right here. This is at 255 on the day after having been down almost 200 at one point. So I was pretty happy with it. I was like, yeah, this is good. So I'll just call it. Didn't call it, which is not ideal. And yeah, so next up I was thinking 11:30 macro. So I really like the 11:30 lunch macro because it tends to run on whoever's been making money all morning, and obviously the longs have been making money all morning. So I figured that it'd be a great idea to go short. If there was going to be a short, it should be at 11:30, and there wasn't a short. But yeah, got short in this area. I then liking how we had souped this high, rejected lower, got short. Didn't like how deep we came, got out, and then we broke lower again, so I got short at the midpoint of this wick. And some other stuff happened in here. Might have got long here or short. But this whole thing is a bit messy. I can go to the 15 seconds, I can see it a bit better. So yeah, getting short, getting out straight away, really tight stop. Well, actually, I got short about here, got stopped out there because I didn't think it'd come that deep. So I was off lower. I get short at midpoint of this wick, and then get stopped out as it comes back up, add on, get stopped out at 53 even. Tried another short as we came above this high, stopped out really fast. I just had a really tight stop. This was just a silly trade, really. Got short again. Not even sure what's happening here. Stopped out immediately it drops lower, so I get short again, get straight out again because I didn't like it. Maybe I'm not. I've lost count of if I'm long or short at this point. You get the idea though. I believe I took a long or two as well, and then um, eventually, getting short in this area, getting stopped out for this big wick, jumping straight back in, then adding, anticipating we shouldn't take out this high now, and sure enough, it just runs it out. So kind of messy stuff in there, and this is all, yeah, all not very ideal price action. So around the 10.50 to 10.10 time of day is when I made a bunch, and then following that I lost a bunch. So if we look at stats, so that's the 10.50 to 10.10 kind of area. That's 11.10. Made a good 150 or so, and then gave it back, and then that was also minus $91 on, or I think, yeah, minus 91 with that gold that got stopped out, which was a correct trade, just the stop was slightly too tight. Yeah, so if we add everything up, let's say we add the gold trade back on, then that's still a good $160 on the day, but down from 330. It would be nice to have, kept a bit more, but I was just trying that 11:30 a.m. trade, which is a perfectly good model and could have worked. It wasn't the best entry, it wasn't the cleanest, and as you can see, when the price action's not that clean, I shouldn't be doing this many executions. Also, if I'd executed this a bit cleaner and just trusted, it to go to my targets, such as this fair value gap, this high and this high, could have done a bit better. But this is really the messy part from the day. And this was just from, I had a good trade idea. I should have waited till after 11:30. That's the first thing that stands out. This is 11:28 when I put my first short in. That's 11:30, and it's usually after 11:30 I want to see us show bearish order flow. So could have taken an entry here that would have been valid, would have been stopped out. I then would have waited for clear CSD again, which would have happened right here on this failure swing. That could have been a short entry with a stop above this high. Could have ridden it down to internal range and either taken a partial here or got stopped out. And then this stop out there, that's really telling me, okay, this is not looking too ideal. At this point, when we have this big wick up, leaving smooth highs and nothing much happening, I should be waiting for more information. If I was correct and it was going to go down lower to this low and lower, then after this wick, we would have started having really nice, clean bearish order flow, and I would have been able to just drop to a lower time frame and just jump in a fair value gap on an order block. And that would have worked out nicely, but we never actually got that. So I could have avoided this entire situation and had a lot greener of a day. Last thing, yeah, you can look at stats. To over executing, and you can see minus 571 plus 642. So this has been a theme these last few days, like all week, is I'm making a bunch and giving it all back. So higher equity high of day, $330. Take it, walk away. $250. Like, take it, walk away. This day. This was yesterday. I had my personal lockout set to 200 for some reason. Went straight into some drawdown and then hit max daily loss like first thing in the morning. So I never had a chance to recover it, but it wasn't the best day either. So yeah, not worried about that. But then this day you can see that's had, a good $300 profit. I decided to take some more trades. That was overnight though, so that's fine. Lost all that. Went back to 530 and decided, well, here's another, we've still got time in the day. Now, it was pretty early in the session. but it wasn't a very clean trade. Like I didn't see anything that made much sense to me, and I still traded and gave it all back. And yes, I could have had 500 on that day, or at least 300. And then the day before that, it's a pretty steady curve going up all day, so that's all good. This one, and then this day, I felt pretty in tune with the market on this day, and that's played out nicely. But these 2 days, and this day and today in particular, I've been up very nice amounts of money, and that's perfectly fine. There's no need to keep trading. 255 on the day at 11 a.m. No, you don't need to. You don't need anything else. It's perfectly fine. So I make most of my money first thing in the morning, really early on, from gold, such as on this day, and later is more a bonus, like around the 9:30 open and further. There's more a bonus. Like if something good shows up, I'll take it, and that's great. But in general, best stuff comes in the morning. And if I'm green on the day and there's nothing too clean, and it's getting later in the day, there's no point trading at all. Like just don't. So yeah, being steady in this account, I would be up another 400, 5, 6, 600 or so at least. Had I just stopped trading when I was at my equity high or near to it, which would put me nice and green. But yeah, that's all good. In fact, I'd be even more than that. I was at 52K at one point before we had yesterday. But yeah, so that will do for today's review. Going forward, I've got my expectations, as I already mentioned, continue higher. I don't know exactly what we're going to do here with Nasdaq and the other indices, because we are nice and extended, just sitting below that previous day high, likely to keep pushing above it. We have just tapped it. I'd like to see us continue just pushing up to this high, ideally. Likely overnight. I wouldn't be surprised if we run up there overnight, then maybe open up Friday and just sell off. But yeah, then on gold, I want to see us continue higher into premium buy side and above this buy side pool. That would be ideal. Going to monitor what happens when we hit this high, like we've just done. Beautifully. That was actually my target, so cool to see. And see if we want to continue pushing higher or roll over from here. This is a point of interest because, but yeah, not something I want to take a trade based on right now. I want to see if we can keep drawing up towards that buy side pool. Following that, I want to see us roll over lower. And yeah, that's about it.